Iraqi Dinar Today latest news channel means staying deeply connected to every shift, anomaly, and unexpected occurrence involving the Iraqi Dinar, the Vietnamese Dong, and the broader discussions around global currency developments. Today's story begins with a disturbance that captured immediate attention among watchers of alternative currency movements. It unfolded around midday on the east coast of the United States, when several major American banks reportedly experienced a sudden burst of internal data activity. Employees inside these institutions described it as an unexpected break in normal operations, not the sort of isolated technical hiccup a single branch might encounter, but something that appeared to sweep across multiple locations simultaneously. This moment stood out because it happened during a period that is normally stable and predictable for foreign currency systems. As this unusual digital event spread across interconnected networks, it drew the interest of people who monitor specialized banking terminals, sparking curiosity about what might have triggered such a synchronized disruption. According to early accounts emerging from individuals familiar with internal bank operations, several large institutions, including well-known national banks, briefly displayed what were described as sharply altered figures for the Iraqi Dinar and the Vietnamese Dong. These numerical changes appeared not on public-facing currency apps or consumer platforms, but within highly secured internal modules used by banking personnel. Witnesses reported that these values did not resemble the slight, routine shifts that occur with live market trading. Instead, they displayed numbers that differed notably from the rates usually observed. Although the updated figures remained visible for only a short time before disappearing or reverting to locked screens, the sight left a strong impression on those who saw it. The suddenness of the appearance and the speed of the reversion prompted questions about whether the event was accidental, experimental, or part of an internal process, not meant for public view. As soon as word began circulating, online communities dedicated to tracking unconventional currency movements reacted with remarkable speed. Screenshots, descriptions, and second-hand reports flooded into digital spaces where these subjects are frequently discussed. Platforms such as Telegram and Reddit, known for hosting active conversations about international monetary systems, experienced a surge in participation. Users debated the likelihood of errors, tests, or intentional system activity, and many attempted to confirm the reports by comparing their own observations or reaching out to contacts in the banking sector. While the excitement around such activity was predictable, an equally strong current of caution ran through the threads, as knowledgeable members reminded others that unverified digital flashes do not equate to any confirmed change in global currency policy. Without official statements, interpretations remained speculative, and community members were encouraged to distinguish between documented facts and personal assumptions. The broader importance of the event becomes easier to understand when considering the complex way global banking networks operate. Individuals familiar with foreign exchange infrastructure explain that large-scale adjustments, updates, or system checks are conducted internally and are rarely visible outside authorized environments. In periods when major changes are being prepared, institutional systems often undergo phases of testing that involve temporary insertion of placeholder data, synchronization checks, or stress evaluations designed to confirm that information can move efficiently across multiple platforms. These tests, typically shielded from the public, sometimes create brief visibility leaks when internal test data intersects with live software layers. Such moments can result in fleeting displays on terminals that employees use during routine work. Because these tests are conducted across large interconnected systems, simultaneous activity at multiple banks is not unheard of, although it usually remains unnoticed unless a visibility gap allows observers to catch a glimpse of the underlying process. One particularly notable detail in today's reports is that no corresponding rate changes appeared on public services such as major financial news terminals or widely used online currency resources. Platforms like Bloomberg and Reuters continued to show standard market numbers throughout the day. This contrast is meaningful because it reinforces the idea that whatever occurred happened strictly within institutional banking environments rather than across public channels. If the anomaly had been caused by an ordinary data feed error, it likely would have appeared on consumer platforms as well. Instead, the situation appeared confined to systems used internally by banks, suggesting that the event was linked to processes shielded from public eyes, possibly involving internal calibration, testing, or data refresh cycles that were not intended for widespread visibility. Much of the ongoing attention remains focused on Iraq, because its currency has been the center of many discussions regarding economic reconstruction and long-term reforms. Over recent years, Iraq's government has worked to strengthen financial oversight, expand digital payment technologies, and reduce vulnerabilities that previously affected currency stability. These efforts have been acknowledged by international financial institutions and have played a role in shaping global expectations about Iraq's economic direction. When news surfaces involving internal displays of altered dinar rates at major banks, observers naturally consider whether such activity might relate to the ongoing modernization of Iraq's monetary systems. While it is essential to avoid assuming causation, the timing has drawn attention due to recent statements from Iraqi authorities emphasizing progress toward strengthening the nation's monetary framework. Earlier communications from Iraq's central banking leadership highlighted steps toward improving transparency, enhancing regulatory alignment, and preparing systems for a more unified and stable exchange structure. When placed alongside today's internal banking activity, some observers see parallels between the technical preparations described in official channels and the type of system behavior reported in U.S. institutions. Nonetheless, it remains crucial to recognize that internal digital tests do not equal public policy actions. They instead demonstrate that institutions are continuing to manage and update their systems, which is common in periods of economic transition. This perspective helps frame the internal rate displays not as definitive outcomes, but as operational processes occurring beneath the surface of global finance. Vietnam's appearance in the same set of internal bank flashes adds an additional point of analysis. Vietnam's economy has experienced sustained industrial development, significant trade expansion, and growing engagement with international markets. As regulatory modernization progresses within the country, analysts have noted increased attention to capital monitoring, compliance upgrades, and improved financial reporting structures. All of these changes support a system that is gradually aligning more closely with global standards. Because of this context, technical activity involving the Vietnamese Dong inside foreign banking systems is often examined closely by those studying the evolution of regional financial frameworks. The simultaneous appearance of altered figures for both Iraq and Vietnam increases interest, not because it suggests any confirmed policy shift, but because synchronized internal activity can sometimes indicate shared system evaluations conducted across multiple currencies. While some speculate that the timing of both currencies appearing together may reflect multi-currency testing, this remains within the realm of operational analysis rather than confirmed coordination. When banks conduct large-scale testing cycles, they may evaluate several currencies simultaneously to ensure system-wide consistency. Such testing does not imply any planned outcomes or market adjustments, but instead serves to validate the reliability of software environments that handle international transactions. The lack of official confirmation from either nation reiterates that assumptions should remain grounded in verifiable fact. Nevertheless, the coinciding technical behavior across U Bank terminals continues to be examined because synchronized anomalies tend to attract interest in sectors that observe long-term patterns in global financial infrastructure. Noticeably absent from reports today was the Zimbabwean currency, which has also been discussed in global financial circles, especially following Zimbabwe's introduction of a gold-backed model earlier in the year. Although the currency did not appear in the internal flashes described in U.S. banks, Zimbabwe continues to engage in an extensive rebuilding process involving monetary stabilization efforts. Analysts observing Regional Settlement Day to note that Zimbabwe has been working to strengthen its transactional consistency while aligning with revised financial frameworks. The absence of internal activity relating to Zimbabwe in the current event does not indicate stagnation, but instead underscores that different currencies progress through system updates on independent timelines. In complex global systems, sequential integration is often more practical than simultaneous modifications. Major financial institutions and global regulatory bodies continue to track developments in Iraq and Vietnam, noting progress in both governance and monetary policy. Recent evaluations from organizations such as the IMF have acknowledged significant strides made by each country in aligning with international standards. These acknowledgments do not represent predictions about currency direction, but do reflect recognition of improvements in financial structure. Because of these reviews, technical events involving Iraqi and Vietnamese currency data tend to generate more discussion. When banks undergo internal maintenance or system refresh cycles following moments like today's flashes, it further reinforces the likelihood that the activity was part of an organized technical process rather than an unexpected system malfunction. Following the flashes, several banks reportedly entered temporary maintenance modes, particularly for their foreign currency interfaces. Notices referring to system updates or service outages appeared in some cases. These types of restrictions are commonly used when back-end systems require configuration adjustments or when institutions are performing internal calibrations. When viewed alongside the earlier digital activity, the maintenance periods have been interpreted by some as a continuation of the same underlying process. While these steps are part of routine operations, the timing relative to the internal flashes naturally generated heightened attention. Still, it is important to approach such connections carefully, as the appearance of proximity does not alone confirm any specific cause. Online traffic metrics indicate that digital platforms centered on currency tracking and research experienced a dramatic increase in user activity within minutes of the report's surfacing. Discussions ranged from personal observations to attempts at technical breakdowns of what internal banking flashes might indicate. Former systems analysts and individuals familiar with financial infrastructure commented on past instances when temporary visibility leaks occurred during major system tests. According to these voices, such flashes can result from the brief intersection of test environments with live operational layers, particularly during synchronization cycles. This type of cross-environment visibility is typically unintended but not unprecedented. Their commentary emphasized that internal rate appearances generally reflect system preparation rather than policy implementation. Some contributors with backgrounds in banking technology describe these flashes as indicators that system components are being evaluated for performance at scale. In complex financial networks, liquidity pathways, settlement engines, and communication protocols must all undergo verification before major updates can be deployed. During such verification periods, internal displays sometimes show data that is not meant for external interpretation. The briefness of today's flashes aligns with patterns seen in previous technical testing cycles, documented throughout financial history. However, these assessments remain speculative in nature because no institution has issued a formal explanation of the exact cause or purpose of the internal figures. Alongside these discussions, rumors circulated regarding certain wealth management clients being asked to remain contactable or available for several days. Such advisories, when they occur, generally relate to administrative procedures or time-sensitive actions rather than specific currency events. It is common for financial professionals to request accessibility from clients in anticipation of transactions, reporting cycles, or regulatory deadlines. While these messages drew attention in the context of today's events, they do not provide concrete insight into internal banking activity. Without official clarification, their relevance remains uncertain. Individuals who hold physical currency such as the Iraqi Dinar or Vietnamese Dong often use events like this as reminders to remain organized with documentation and records. Ensuring that proof of purchase, storage information, and transaction history is accessible is standard practice recommended for any asset. Likewise, monitoring reliable institutional sources rather than relying solely on online chatter helps maintain an informed perspective. Banks vary in their procedures regarding foreign currency services, so understanding how local institutions operate is useful in general financial planning. None of these organizational steps imply any expectation of change. They simply represent prudent preparation in managing personal holdings. In theoretical discussions sometimes explored by analysts and researchers, events like today's internal flashes are interpreted as glimpses into the operational side of global financial networks. These discussions examine how large systems conduct simulations designed to verify interconnectivity, prevent data loss, and ensure that currency-related information propagates correctly across jurisdictions. In these models, visibility leaks are viewed not as errors, but as signs of transitions occurring within system architectures. While these scenarios help illustrate how global networks function, they remain analytical tools and should not be interpreted as confirmations about policy decisions. Such theoretical interpretations also consider phased integration strategies, in which currencies are updated in successive groups rather than all at once. This staggered approach allows central banks and global institutions to test load capacity, settlement timing, and rate alignment across multiple regions. The absence of Zimbabwe's currency in today's U.S. banking flashes fits into this hypothetical framework, suggesting that individual currencies may undergo system evaluations at different times based on their structural needs. These models more accurately reflect the complexity of global financial systems than assumptions of simultaneous change. Inside central banking institutions, system tests often involve close monitoring of how data behaves across networks. Analysts track timing, location, and synchronization to ensure consistency. If a visibility leak occurs internationally, it can serve as confirmation that system pathways are functioning as intended during testing. However, none of this provides insight into public-facing monetary decisions. Instead, it reflects the standard internal operations required to maintain resilient financial infrastructure. The connection between domestic systems and foreign financial institutions relies on rigorous validation processes that are usually invisible to the public. Security agencies and financial regulators routinely monitor periods of heightened speculation to ensure stability and prevent misinformation from influencing public behavior. When online interest spikes, these bodies analyze communication trends to evaluate potential risk. The lack of major intervention following today's event suggests that the situation did not pose a systemic threat. This restraint indicates confidence in the stability of underlying networks despite the attention generated by internal rate flashes. Regulatory authorities typically step in only when operational integrity is compromised, which did not appear to be the case here. Some community discussions referenced a short-term observational window often described in theoretical models relating to system alignment cycles. In these frameworks, banks temporarily limit certain services while confirming synchronization of internal rates and settlement mechanisms. Although this concept matches the timing of the system flashes and subsequent maintenance messages, no official entity has verified any link. These cycles remain part of educational models used to understand banking operations rather than validated explanations of current events. Without formal statements, the connection remains speculative. Analysts emphasize that projections related to currency values are simply hypothetical constructs used to study potential economic outcomes. They are not definitive indicators and should not be treated as guarantees. Actual currency valuations depend on a wide range of factors including economic conditions, global policy coordination, and national decision-making processes. For this reason, it is essential to avoid drawing direct conclusions from temporary internal banking activity. Visible tests do not confirm future actions. They highlight the complex and ongoing work required to maintain international financial systems. In reviewing the reports, today's synchronization across multiple banks serves as an example of how intricate and interconnected global banking systems have become. Internal flashes, maintenance cycles, and online reactions provide insight into how sensitive these networks are to even minor anomalies. While the true nature of the internal displays remains unconfirmed, the event demonstrates how quickly information spreads and how closely observers track developments involving the Iraqi Dinar, Vietnamese Dong, and other currencies in ongoing global discussions. As with all reports of this nature, it is critical to rely on verifiable information and maintain realistic expectations. Internal system activity should be interpreted as part of the technical landscape of modern finance rather than as evidence of immediate public policy changes. The evolving nature of global financial infrastructure means that testing, updates, and data fluctuations will continue to occur over time. Today's event simply underscores the importance of staying informed while separating documented facts from speculation. This channel will continue to follow developments responsibly and provide updates as new information emerges. The goal remains to offer clear, accurate, and educational coverage without assumptions or unsupported conclusions. As always, all content presented here is for informational purposes only and should not be viewed as financial, legal, or investment advice.